appreciate real-time trade ideas to our clients. Today is my great pleasure to join Forex to share some knowledge and my experience on the Forex market. So, in the next 20 to 30 minutes, we will study some basics of the Forex market, and I'd like to introduce you to the world of technical analysis. Here is a brief introduction of our company, Trading Central. Basically, Trading Central is an investment research house with technical analysis as our core business. We have a track record of 15 years and now office in Paris, London, New York, and Hong Kong. Here list some of the qualifications and the awards that we received in the past. And one more thing that is not mentioned here. We are licensed by some leading market regulators, such as SFC in Hong Kong, SEC in the US, and AMF in France. So let's see today's plan. First of all, we will learn some basics of Forex market. Before trading the market, we need to know the market and like the market. If you hate the market, why trade it? So after we get to know the basics of Forex market, we will introduce you the technical approach to trade the market and some basic but very important concepts of technical analysis, such as trends and what is support, what is resistance. So hopefully at the end of this webinar, you will find that your time is well spent. Let's begin with the basics of Forex markets. The first simple fact about Forex market is that Forex markets are the largest market in the world. According to a survey by Bank for International Settlements in 2013, the daily turnover of Forex trading is more than 5 trillion US dollars. So how large is 5 trillion? Compare this to the size of stock markets. The daily trading volume of world's stock markets combined is less than 0.5 trillion per day. So you can see the huge difference. As a matter of this large size, the liquidity of Forex markets is also the best. Is liquidity good for trading? Of course. Who wants to trade a so-called dead market? Now, the second fact about Forex markets, the trading hours is very long, as you can see from this chart. How long? Basically, the Forex market is open 24 hours a day and 5 days per week, which means you are able to buy or sell whenever you want. And one more thing, as you can see from this chart, when the London and New York overlaps, the trading volume is the largest. And the latter feature of Forex trading I'd like to tell you here is that most likely Forex trading involves leverage or so-called margin trading. So what is margin trading? The good thing about leverage is that, say, with 20 times leverage, if you make a 5% return, your deposit will actually double, which means 100% return. The bad thing is that also we say with a 5% loss, you actually lose 100%, which means all of your deposit. So I'll let you to decide the degree of leverage you want. The simple rule is to choose one that makes you feel comfortable. So here are some currency pairs and their leak names. On the left are the major pairs, and on the right are some of the minor pairs or cross pairs. For example, British pound versus US dollar, and professional traders often call it cable. So if you want to be professional, remember these leak names and use the leak names. And here is a quote example of euro dollar. So here euro is the base currency and the US dollar is the core currency. So which means 1 euro is worth how much dollars? In fact, many beginners get confused here. So it's very easy to understand. If you replace euro by a physical stuff, say a car, a house, how much does that cost in dollars term? So you can understand this quote. Now the market bid is 1.25 and the market ask price is 1.2505, which means if you want to sell now, you can only sell for 1.25, and if you want to buy, you have to pay 1.2505. This difference is called price spread, which is the cost of trading, and in this case, the spread is 5 pips. So what is a pip? 1 pip is the smallest unit of the price. Again, saying pips make you sound professional, and this is a good start of successful trading. So in the case of euro dollar, we have 4 decimals for 1 pip. However, in the case of dollar yen, it is 2 decimals. So let's see how to trade Forex. Maybe this is the most interesting and topic that you want to know. Generally speaking, there are 2 approaches. The first one is using fundamental analysis, where traders will focus on economic indicators, central bank policy, and also some geographical or political issues. There is one economic indicator that most traders watch closely, that is the US NFP, which stands for non-farm payroll. It's an employment figure that is normally released in the first Friday every month. As you get to start trading, you will know this figure is extremely important to the analyst. The second point, central bank policy, is also very important. Have you ever heard about QE or quantitative easing? If you don't, then you have to spend some time to do some homework on it, because this concept is also essential to successful trading. So the second approach to trade Forex is technical analysis, which we prefer. So technical traders often observe price patterns and use technical indicators and other price information to help them understand the psychology of the market, thus to follow the direction of the market instead of going against the direction of the market. Then why do we prefer a technical analysis approach to Forex trading? The simple reason is that we believe price have already reflect all relevant information on the market. So just focus on the price and keep it simple. Another reason is that technical analysis can be applied to different trading zones, different trading horizons, including intraday trading, where fundamental approach seldom helps. Thus, most intraday Forex traders will use technical analysis as their major tool. Some people say intraday or short-term trading is very bad because it's like speculation, and speculation is bad. Is that true? It's very hard to say, but I'd like to share an old saying with you that goes, a long-term investment is usually a failed short-term speculation. Why is that? Because some people cannot trade short-term and make profits, and then they go long-term. So actually, what is technical analysis? According to this man, John Murphy, in his classic book, Technical Analysis of the Financial Markets, technical analysis is the study of market action, primarily through the use of charts for the purpose of forecasting future price trends. Well, please do not overlook this definition. Let's emphasize some keywords here. The first term, market tactician, mainly refers to price action, especially in the case for Forex market. But also, we may include the volume information in stock markets or the open interest in futures and options contracts. The second term, charts, this tells us the major tool that technical analysts use. As a result, technical analysts are sometimes called chartists as well. Let's see the third term, trends. Actually, trends is the most important thing of the entire technical analysis. We often hear people say, follow the trends, never go against the trends. And this rule sounds very simple, but actually very few people follow the rules. But what are trends? Trends are the directions of price movements. Basically, there are three categories of trends: the uptrend, the downtrend, and trading range. If we observe higher top and higher bottoms, like in the left, this trend is up. We call it uptrend. Like in the right, we can observe lower tops and lower bottoms. The trend is down, and we call it downtrend. In a trading range, price moves sideways between the support and resistance. Let's see an example to understand the concepts of trend. So here is a daily chart of euro-dollar from 2010 to 2012. As you can see, in the first part, the price goes down, and we can observe lower tops and lower bottoms until the middle of 2011. So this part is called downtrend. And from middle of 2010 to near the end of to middle of 2011, here is an uptrend. Why is uptrend? Because we can observe higher tops and higher bottoms. And since middle of 2011, again we can see the lower bottom and tops. So here is again a downtrend. So after we understand these trends, how can we trade this market? It's very simple. In the downtrend, you just sell on the rally, sell early rally. And in the uptrend, like in the middle part of this chart, in uptrend, you just buy on dips, buy on dips. This is very simple. Now let's get to the concepts of support and resistance. So here I have two charts which show the support and the resistance. As you can see, the support is a level where the price has difficulty to fall below. At the support level, a lot of buyers enter the market and push up the price. As a comparison, the level which prevents the price from rising above is called resistance. As you can see, this chart on the lower bottom. So, to determine the significance of support and resistance, we can simply count the number of price tests. The more tests, the more important. Is support and resistance important? Sure. After you are clear about the potential support and resistance, you can set your profit target and also your stop loss points. Then you have a basic trading plan. Here is an example. The daily chart of euro-dollar. As you can see, the level of 1.3. This level is a very key horizontal support level. In the year 2012, the price dropped and tested this level 3 times. So it's very attractive opportunity if you enter the market to buy near the support and just put your stop loss below this support level, and you can win 3 times. And then in May 2012, the price dropped below this key support, and you lose only once. And after that, 1.3, this level, again, it become a very important resistance for the price. And price retested in 2013. So, as a matter of time, we cannot cover every aspect of technical analysis in this webinar. And if you would like to learn more about technical analysis, it's a good beginning to learn the following concepts first, such as the Zhao theory. What is Zhao theory? The price patterns, the candlestick patterns, and some technical indicators. And also, apart from the price aspect, you can also learn the risk management aspect. And also, another very important aspect, that is the psychology, the trading psychology. So here comes to the end of today's webinar. I'd like to thank Forex for inviting us as the guest speaker. And do we have maybe we have 5 minutes for Q&A?
Yeah.
Salami, are you there?
Yeah, I'm there. Thank you so much, Lee.
My pleasure.
Okay, fine. Thank you so much. So, this 1 second. These are contact details. So, if you want to know if you have any query about our products and services or any training courses, so you can make contact at this number. Plus, you can send a mail as well. That is info@formexmarket.com. So, we are just closing down it here. And you can also note down our address, that is 622 unit number C, 6th floor, 215 Atrium, Chakala, Andheri, Kurla Road, Mumbai. And contact number is 022-264-642346. Okay, thank you so much everyone.